Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Katie Greifeld. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's a global simulcast with our friends Carol Masser and Tim Stenovic. Welcome to our audiences across all of the Bloomberg platforms, television, radio, originals, and of course our partnership with those folks streaming this on YouTube. Carol Masser, about 2 minutes to go until we get to these bells here. And I was just talking with Katie here. The big outlier today are actually small caps. The Russell 2000 up almost 3%.
Yeah, really kind of roaring back here. And maybe it's kind of interesting, right? If things are starting to slow down, shouldn't that mean that the small cap should have a little bit of a harder time if the economy could maybe come undone? I don't know. I feel like there's a lot of mixed questions. We were just talking with Abigail Doolittle. Feel like, how much the sentiment changed in just 1 week here. Which one am I supposed to believe at this point if I'm an investor?
Yeah, she basically said that she spoke to sources today who gave her the idea that people should be cautious in an environment like this. I mean, Abigail told us, Katie, that when you think about a rally that's gone this far, this fast, and the way sentiment shifted in such a short time, some of this could be short covering. Watch out next week because a lot of the stocks that she's been looking at have hit resistance on a technical level, and they're not getting as high as they were getting before. So they could see a barrier.
And you have to weigh that, of course, with what's going on in the Treasury market as well. Just a breathtaking move lower in yields. And, of course, a lot of that, too, might not necessarily be fundamental, but more of those technical and positioning factors that you're talking about.
Yeah, I mean, and it kind of gets to this idea of if it does unravel and sort of what would be, I guess, the catalyst that leads to that. We are getting the closing bells here in New York. Let's walk you through the numbers here. An up day and an up week for most of the major indices here in the U.S. We start with the Dow Jones Industrial Average, higher on the day by about 0.6%, up about 200 points, back above that 34,000 level, and adding to what is now gains of about 5% here on the week. Best weekly performance for the Dow going back to October of 2022. Meanwhile, the S&P 500 up 0.9% on the day. That's adding to about what is now going to be a 6% gain on the week. Best week going back to November of 2022. And the NASDAQ Composite also getting in on the action, up about 1.4%. And again, once again, having its best week since November of 22. But look at this. We got to talk about the Russell 2000 here because it was an outperformer all day long, all week long, up about 3% here on the day. Its best day going back to mid-June. And on a weekly basis, an 8% gain appears to be locking in. Best week for the Russell, Carol, going back to February of 2021.
What a shift in sentiment and going into a weekend. It's kind of interesting to see all this enthusiasm. You look at the S&P 500, 415 names to the upside, 85 to the downside. NASDAQ 100, you've got 84 names gaining today, Katie, and 17 to the downside. So really a risk-on trade once again.
Yeah, and you can see the same sort of story playing out in the industry groups as well. You have a bunch of groups higher right now. Leading the charge are those semiconductors and the semi-equipment companies. As I believe it, all of the names in that group are positive right now, leading it to a 2.6% rally. Consumer durables, consumer services, banks as well, also getting in on the action. Take a look at some of the losers. There's not many, just 3 out of 24, but it's tech, hardware, and right there at the bottom you have energy not having too great of a day, down about 1% overall.
All right, so let me get to some of the individual gainers. Had a lot to choose from on this Friday, thanks to the rally. A couple of, I feel like a lot of experiential companies were definitely rallying in today's session. Expedia among them, finishing just off its highs of the day, almost a 19% gain, seeing this top among the major indices as well. We know the company reported third quarter earnings. They beat estimates. They announced a $5 billion share buyback. So that certainly, kind of juiced investors and made it more interesting as well. Live Nation up about 3.5% off its highs of the day, but also this company reported third quarter results that beat expectations. Analysts positive on the company's demand prospects for 2024. So a little bit of a feel of an outlook, certainly from the analyst community. Gartner, we don't talk about it a lot, but it's a pretty big company. It's a $30 billion information services and research company. It is top among the S&P 500, climbed to a record today after boosting its full year projections for revenue and adjusted EPS, so up about 14.5%. 2.5%. And Moderna, this was number one in the NASDAQ 100, rallying after taking quite a hit yesterday following earnings and an outlook that was disappointing. HSBC, though, upgrading the stock to hold from reduce, saying the downside has played out. So you can see that stock up just under 9% in today's session.
All right, well, let's go to the other side of things. In the S&P 500, the worst performer on a percentage basis, the cybersecurity firm Fortinet, finishing the day down by 12.4%. Shares fell, Romaine, earlier by as much as 23.4%. It paired those losses to close at just 12% lower. The company cut its billing forecast for the year after its third quarter billings missed the average analyst estimate. Let's take a look at shares of Apple. It's actually the worst performer on a points basis in the S&P 500 today, finishing it down by half a percentage point. We've been talking about it for almost 24 hours now. The holiday quarter revenue will be about the same as last year. We learned on the call yesterday. The company also reported its fourth straight revenue decline, streak that it suffered all the way back in 2021.
So all those IMAX and whatever they announced earlier this week, that didn't really move the needle?
I mean, those don't show up until next quarter, until the current quarter that we're in. But there's a reason. Mark Gurman talked about it.
What's that?
About rushing out those new Macs to help that sluggish PC market.
So people can buy those
for the holiday quarter, yeah.
Okay.
Did you want a new computer for the holidays?
I mean, I wasn't asking, but since you're offering today.
All right, the wearables, the
Do you
wearables.
want a refrigerator or what was the other choice?
I'll take the boat.
Refrigerator, that's right.
I might get you a $7 latte instead, Romaine. Love you, but
I'll take it.
all right.
Ouch.
Let's talk Bill.com. Bill Holdings, the parent company of Bill.com, falling today, down 25% at the end of the day. At one point, it was down as much as 35%. That would be the worst intraday in the company's history. The company cut its annual revenue forecast. It also reined in its full-year projection for adjusted EPS. We saw a couple analysts cut their recommendations on shares.
Yeah, we have to talk about what happened in the yield space on the day and on the week, because it was interesting to start to see this rally sort of take foot here, and maybe there are some legs to what we're seeing there. Most of the curve shifting on the day lower, as you can see there on your screen, down about 16 basis points on the shorter end. That's your 2-year yield, and it's down, of course, on the week as well by about 17 basis points. A similar move on the 10-year yield. It's down 9 basis points on the day, but about 27 basis points lower from where it was last Friday. And remember, it's about it had dropped last week by about 8 basis points here. So we're starting to see this rally take foot here, and it really kind of dovetails too, I think, with some of the commentary, I guess the tit for tat, if you will, that we've been seeing between Sam Druckenmiller and Janet Yellen about what's actually moving these yields. Of course, the idea that Yellen says it's not really about Treasury supply, and I guess to a certain extent, Druckenmiller actually agrees with her. He says it's partly about Treasury supply, but it's also about deteriorating economic conditions.
Yeah, it gets back into that bond math, right? And of course, they're going tit for tat over that, like you say. But I mean, it has been really the story of the past couple months, this supply that we're getting. And let's not forget, of course, in addition to the Fed, in addition to today's jobs report, we also got the refunding announcement. And bond sales are going up, but not as much as expected. And you think about what had been priced in, this sort of worst case scenarios. And you could make a case that this is just a fundamental sigh of relief that we're seeing in the Treasury market.
I will say, when we were at the Schwab event last week, Kathy Jones, who follows the fixed income market, she said she actually was looking at treasury supplies and went back several decades to try and find a connection in terms of impact on rates. And she said she couldn't find any. So, because we were like, well, what about treasury supplies? And
it's a very EM sort of thing. Doesn't usually happen in the Treasury market.
Okay.
Okay.
I mean, she kind of debunked it. Yeah.
I mean, I don't know if the data supports it either, but I think everyone's looking for that narrative as to why things are moving, because they shouldn't move, at least not to the extremes that they've been moving.
Hey, what do you guys think of the Bostic interview that we just saw with Michael McKee? I thought it was interesting, a couple headlines that crossed during that interview, Romaine.
Yeah.
First of all, the Fed doesn't necessarily need to wait until inflation hits 2% to start cutting rates.
Yeah.
And the fact that, we spoke to Steve Matthews a little earlier, and he said, Raphael Bostic might be able to sort of get up and do some sort of victory dance, because he's been talking about the data that we saw today for the better part of a year at this point.
Yeah, of course, he doesn't have a vote, so we should point out that, just kind of clarify that. Obviously, his opinion still matters. But, I thought the idea here, though, also that him saying that, look, they have the luxury of waiting. I think he put a peg on it of something like 8 to 10 months, where the Fed can sort of stand and keep rates where they are while they wait and see. But the other thing I was interested in, too, was towards the end of that interview, he was asked about wage growth. And he kind of reference this idea that those 10 to 15% salary increases people got, that's a thing of the past, and they were going to revert back to 2018, 2019 growth levels. And I went to look at the data because I wanted to see what the official data was, and that was like, we're talking like 3% growth rates on average that we saw back then. So that's a pretty big drop from what employers were having to pony up, if assuming that 10 to 15% was indeed what they were paying out.
Does Uncle Raphael come for Thanksgiving?
No, well, here's the thing. I'm positive that we're long lost, cousins or something like that.
It's
and he's
spelled
just in
differently.
denial, which is why he dropped the K from the end of his name.
Okay.
I'm going to talk to him and see.
See, I was confused,
The
'cause
family
I
is
thought-
ready to welcome you back.
I thought Mike McKee was going to
Yeah.
interview Romaine, so I was a little bit disappointed when Raphael showed
That would have
up.
been something.
Yeah.
Don't forget, I think we get that senior loan officer survey, right? Didn't we get that on Monday? So that'll be a good indication of how.
We're still
Slews.
paying attention to the slews.
It's been a while.
But I'm kind of glad. Are we almost past the, because everyone's talking about how the Fed's almost done and we're always doing. I hope we're past the point where we're looking at these really small esoteric data
These
points
third-tier-
and trying to like make some sense out of what the heck is going on.
These small esoteric data points like you, Romaine. Just gonna say. They like you, I'm saying. You're kind of dissing them and you're like, they
I
like
never know when
you.
she's
Thought you were
complimenting
saying-
me or insulting me. It's all just kind of a
Go
blur.
buy the boat or refridge,
So.
okay? Just do that over the weekend. All right, guys, that's a wrap. Our
I can't
cross-platform.
afford either one of those.
This economy?
Yeah.
All right, our cross-platform radio, TV, YouTube, Bloomberg Originals. We will see you again next week, everybody.